It's been a tough year for M&A as companies put their acquisition plans on hold. Deal volumes in the U.S. plunging by 43% to $1.5 trillion this year amid market volatility and also higher rates. So what can we expect in 2023? We want to bring in Mitch Berlin, EY America's Strategy and Transactions Vice Chair. Mitch, it's great to see you. So are you optimistic that things are going to turn around at least in M&A next year?
We are optimistic, Shauna. Last year, or 2022 will close out at about 15,000 deals closed compared to 2021, which had 20,000 deals closed. It's important to know that 2021 was an exceptional year, it was a record-breaking year. 15,000 closed deals puts us back at where we were pre-COVID, and we're expecting something similar in 2023.
Primarily, what was the factor that crushed the acquisitions in 22?
I think it was just the persistent inflation, the high interest rates, the cost of capital was higher, but doing deals became more expensive. And so people stepped to the sidelines.
Mitch, when you take into account, I guess, why you're more optimistic looking out into 2023, where you're expecting to see activity, where's that?
Well, we're looking, M&A is always hot in tech. Tech was the number one sector for M&A for the last 10 quarters, and we expect that to be on the shopping list again this year because it's not only tech companies buying tech companies, but it's also non-tech companies buying tech companies because they want to accelerate innovation, they want to digitize their business, so tech will still be hot. Large pharma. They have very strong balance sheets. They were very active in 2022. They're going to continue to be active in 2023 and will take advantage of some of the lower valuations. And then oil and gas was hot, and we'll continue to see oil and gas as a dominant player in the deal markets, assuming the commodity prices hold.
How does the regulatory environment impact future M&A deals, in particular the focus on the government trying to block the Microsoft Activision Blizzard acquisition?
It does. I mean, look, last year in 2022, we saw a 30% increase in the deals between $100 million and $500 million. And a big reason for that is that they fly under the radar of the regulators, so they're just easier to close. But we still think big deals are going to happen. There are a lot of, big deals in the hopper right now. We see a lot of spin activity. I would say that in the 20 years that I've been doing deals, I've never seen so many spins. There's clearly a spin fever going on right now. We have closed about one new spin engagement a week for the last 12 weeks, and that's unprecedented. So, a lot of activity around divestitures and sell side. We think, CEOs are going to continue to get their house in order. They're going to do portfolio analyses. They're going to get rid of their non-performing stocks. They're going to get rid of their non-performing businesses. They're going to shed those businesses that are no longer relevant. And quite frankly, a lot of these CEOs are looking to become pure play companies versus diversify because it's easier for institutional investors to understand what they're investing in. Yeah. So I would expect to see a lot of sell side activity as well.
Yeah, Mitch, I'm curious just more about the spinoffs, just more, I guess, where industry specific you see that taking place in 2023, because you're right, that was a huge trend in 2022, and it sounds like you're still seeing some momentum in that space.
Shauna, we're seeing a lot of momentum, consumer products, industrial products. We continue to see a lot of activity there. It's not just spins, it's also divestitures. And that's going to continue well through 2023.
All right, appreciate that, Mitch Berlin, EY America's Strategy and Transactions Vice Chair.